Hey, what's up everyone? My name is Lawrence and welcome to my YouTube channel, where I teach you how to become a day trader through tips, resources, and best of all, insight on my journey to becoming a profitable day trader. In this video, I'll be explaining candlesticks. Monday through Friday from 9:30 a.m. to 4 o'clock p.m. Eastern Standard Time, the stock market is open. A giant auction where people buy and sell stocks every second, and this is known as trading. And because people are trading their stocks every second, the price of a stock is always on the move. So us as traders, we need to know a few things. How do we keep up with the price of the stock? What's an easy way to see a stock's price history? And what can help us as traders get an edge to predicting the next price move? And there are a lot of answers to these questions, but a simple one is candlesticks. A candlestick is a visual representation of a stock's price and volume within a certain amount of time. So we have three parts that make up a candlestick: price, volume, and time. Now let's take a look at them. Price. As I said before, the stock market is an auction where people all over the world trade their stocks, which is why the price of a stock changes every second. If majority of people in this auction want to sell a stock, the price of the stock will go down, and in result, we'll see a red candlestick, formerly known as a bearish candlestick. And if majority of people want to buy a stock, the price will increase. In result, we'll see a green candlestick, formerly known as a bullish candlestick. I made an infographic showing the details of a candlestick. The legend is at the bottom, so if you want to pause the video and review it, go right ahead. And just like a normal candle, you have a body and the wicks. The length of the body plus the wicks shows the price the stock has reached within a certain period of time. You can choose different time frames, but for this example, we'll use the 5-minute time frame. I like to think of it as a receipt. It tells me at what time the stock reached a specific price. Now let's read the receipt. The bottom of the wick tells you the lowest price the stock has reached within these 5 minutes, which in this example is $25. The top of the wick tells you the highest price the stock has reached within those same 5 minutes, which in this example is $30. That's the same for bullish and bearish candles. The open is the opening price the moment that 5-minute session has started, and the close is the last price the stock has reached when the 5-minute session has ended. Now, if you check out the placement of the open and close prices, they're different on the bullish candle than it is on the bearish candle. That's because the bullish candle tells us the stock price will increase, the price will go up. So the close will always be higher than the open price. And if you check out the bearish candle, the open price will always be above the closing price because a bearish candle indicates that the stock price has gone down. Bullish goes up, bearish goes down. Okay, we got price out the way. Now, volume. In any auction, there has to be participants. The more participants there are, the higher the volume. And as a day trader, we always want to trade in high volume and high volatile conditions because the higher the volume, the bigger the price move will be. 10 participants can bid on an Amazon stock and push the price up $5. And that's great and all, but what if there were 1,000 participants? The price can move up $500. We want big moves in order to profit more. The candlestick won't give us an exact number of participants in the auction, but the length or the size of the candlestick will help us gauge the amount of volume there is. Check out the graph. I highlighted in yellow the candlestick with above average volume compared to the other candlesticks. If you look at the last highlighted candlestick, it opened around $152.50. We're looking at the company Apple, by the way. So it started at $152.50 and went all the way up to around $162.50. No other candlestick has had a $10 range like that, so that would have been a great day to trade. So just as an overview, volume is the amount of participants trading a stock. The more participants trading, the higher the volume, which is ideal for traders because the price move will be stronger, leading to higher profits. All right, so we're on a roll. Now let's go to time. Time on a stock chart, you can choose whatever time frame you want, from 1 minute to 1 month. When you choose a time frame, that's the amount of time that one candlestick represents. As we covered before, a candlestick shows you the price and volume. So let's say you choose a 1-day time frame. Each candlestick on the chart will show you the price and volume that was reached in 1 day. Let's look at my infograph. Different times, same candle. All of these candles literally represent the same thing, but it's just broken down into pieces. So we're looking at the company Apple. We see the 1-day candle, which represents one trading day, 9:30 a.m. to 4 o'clock p.m. Eastern time, when the stock market is open. This is everything that happened on January 11th, 2022. If we wanted more detail, we can go to a shorter time frame, such as the 4-hour time frame, which displays 2 candles. And if we break that in half to the 2-hour time frame, we'll see 4 candles, which breaks down the 4-hour time frame and the 1-day time frame into even further detail. And lastly, if we check out the 1-hour time frame, which shows 7 candles, again, breaking down the entire trading day by the hour in detail. Unless I'm giving you too much credit, I know you're probably wondering, if there are only 6.5 hours in a trading day, shouldn't there be a half a candlestick less than what's being shown? And honestly, it's nothing to worry about. It's only giving you historical price action and volume, nothing extra. So there's nothing to worry about. Here's a useful fact for day traders. As you know, day traders are trying to predict the future. We're guessing if the price will go up or down by using historical data. The smaller the time frame, the closer the details are. But the bad side of it is the more volatile and less reliable the data is. The higher the time frame is, the further you are from the details, but it's less volatile and the data is more reliable. A 1-day candlestick is made up of 6.5 hours of data. A 5-minute candlestick is made up of 5 minutes of data. Easy to say which one is more reliable. One just takes longer than the other to execute. In this game, patience is virtue. So I have some day trader laws, which are key points and good things to remember when trading. Number 1, best to trade in high volume and volatile conditions. Number 2, more participants equals bigger price moves equals bigger profits. Number 3, the higher the time frame, the more reliable the data, but longer the profit. This is for swing traders. And number 4, the lower the time frame, the less reliable the data, but the quicker the profit, and these are for scalpers. And by chance, if you don't know what scalpers or swing traders are, there are many different ways to day trade. So I'll be discussing that in further videos. And lastly, the only thing that you really need to make money from day trading is price and volume. I'll also be discussing this in further videos. So I'm going to head out on that note. Subscribe to my channel. Click on the bell to be notified when I drop new videos. And if you like this video and you find it useful, please don't forget to hit that like button. Y'all be easy.